Imagine writing off 100% of your new commercial building investment this year. Not over 39 years, but literally in year one. So if you are a high income earning professional that's looking to play the tax game and invest in commercial real estate, or you're already an active real estate investor, this one tax change could be the biggest wealth hack of 2025. We're gonna break it down in today's video. What's going on, wise investors? Welcome back to the channel where we help you build wealth through commercial real estate. Congress is so close to passing what they are calling the One Big Beautiful Bill. Now, there's still some things that need to get worked out. However, one of the standout features of this bill, the return of 100% bonus depreciation from 2025 through 2030. So that means any qualified real estate or equipment placed into service in that window of time can be fully expensed up front. Yes, you heard that right. And that is one way that many wealthy and strategic high income earners utilize commercial real estate investment vehicles to offset their federal tax burden. It is a reversal of the scheduled phase out that began in 2023 under the Biden administration. Now, if this doesn't get passed, currently this year in 2025, we're at 40% bonus depreciation. The House is close to passing this bill with some revisions still needing to get worked through, and the Senate's expected to approve it next. And this could completely change how commercial real estate deals are underwritten and executed going forward, which could give a very nice bump to a very slow, stale, and stagnant commercial real estate industry. So let's say you buy a $2 million retail strip center next year. Instead of slowly depreciating it over nearly 4 decades, this could be deducted up to $500,000 or more in year one. That's money back in your pocket to reinvest, to improve the property, return capital to LPs, to ultimately infuse more investment dollars into the industry or the economy as a whole, which would have a very net positive ripple effect and benefit from my perspective. So why does this matter for you as a real estate investor? Well, it provides a huge boost to cash on cash returns. You have the ability to raise capital a little bit easier with stronger IRRs, being able to factor some of these variables in, and you give yourself more flexibility in deal structure and refinancing timelines. Now, for everyday citizens or passive investors, this gives you the opportunity to participate in bigger and faster returns on passive deals if you're a limited partner. You have more accessible syndications for smaller investors, which democratizes access to assets and vehicles that generally the public and mom and pop investors normally wouldn't have access to. And it also incentivizes small business owners to buy or upgrade their own commercial space to reinvest in their business, their community, and overall, it becomes a net positive for everyone involved. So, how can you take advantage of this opportunity? Well, I would just say move up your acquisition timeline to fall within 2025 to 2030 if you are looking to get into investing in commercial real estate. You can schedule a cost segregation study to unlock the full deductions, which there's more details and videos on this channel. You can re-underwrite existing deals with these improved tax projections. You can educate your limited partners or investors about this opportunity in your next pitch to let them know of these advantages that they may be overlooking. That could be what puts them over the edge on wanting to invest and participate in these benefits. But I would suggest syncing up with your CPA to run a updated pro forma on different tax strategies, how that impacts maybe your deal or your investors or your specific investment situation. Now, I believe this to be a complete no-brainer policy. It rewards investment, it boosts jobs, it helps small business owners win, not just institutional players, which is why I love this vehicle of commercial real estate and bonus depreciation. I think Congress should make this permanent. They should stop treating pro-growth tax policy like a political football and actually have it be something that everybody is incentivized to take advantage of by investing, by building wealth, not only for themselves, for other people, and all of the net benefits that ripple off of these types of investment strategies and policy. I personally am hoping for this to get passed and enacted this year, being that I have a 1031 exchange that may end up being a failure. I can't find and identify an asset that meets my investment criteria and the returns that I'm looking for. And with this failed 1031 exchange, guess what? I got a tax burden that goes along with that. However, if this gets reinstated up to 100%, instead of me having to go out and buy a $12 million asset to tax plan my way out of some of the taxable burdens that I would incur through this failed 1031 exchange, by this getting reinstated, I would only have to buy a $5 million asset. Again, these are all kind of theoretical numbers based on the discussions I'm having with my CPA and my specific tax situation. So I encourage you to make sure that you talk with yours, depending on where you're coming from and what you are looking to accomplish. But overall, understanding how just one policy around real estate investment can make a significant impact, not only to you, to your investors, but to the economy as a whole, is extremely important to stay educated and equipped to make the best investment decisions for you. So if you want to lock in these tax smart strategies, if you want to continue to sharpen your sword and be on the front edge of all of the data and policy that could help you achieve your financial freedom goals, then of course, subscribe to the channel. Check out the bonus depreciation guide that is online and gives you a lot more information around how this may apply to your specific situation. And don't forget to check out all the great tools and resources that we have down below. If you're an active commercial real estate investor and you want to be around other hard charging, active commercial real estate investors that are buying assets throughout the year, continuing to network, share resources, and support one another on this journey, I encourage you to check out the Wise Investor Mastermind, where we break down strategies like this every week to help you build wealth through commercial real estate. Until next video, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.